I have found 2023 to be a bit of a perplexing year because the conventional wisdom is that when interest rates rise, as they have all year and really for the past couple of years, stocks don't do well. But this year, stocks have defied that. The NASDAQ is up 31%. The S&P, led by those magnificent seven, up 14%. The Dow, the laggard, at 3%. But explain to me how stocks have been able to put up the kind of year they have in the face of rising interest rates.
Well, first, we did have, and this is probably just a testament to how ancient I am. We did have two different times in the 1990s that this happened, where the economy was so strong that stocks did go higher. And then ultimately, though, both ended badly, ended with some serious sell-offs. But we did have great runs. And what I would tell you, Tyler, is that the great runs, if they can be moderated by the Fed, in other words, if the economy keeps going high and stocks keep going high, but the Fed can somehow cut off the high of the economy, stocks will go higher still because you fight the Fed and then ultimately you actually beat the Fed. And I know it's been 25 years since this has happened, but it did happen once before. And this is just another time that looks very similar to some of the runs we had in the 1990s.
So it's not unprecedented. And what I'm hearing you say is that a strong economy in this particular case has overcome the rising of interest rates. Let's look at, before we drill down on some specific sectors, I'd like to ask sort of a broad sort of macro questions. What do you see as the big investment opportunities in 2024? And what do you see as the possible looming threats to investments and prosperity in 2024?
Sure. Well, right now, because we had a schedule that was made last week, and it was very sub rosa, the Treasury, about how many bonds they're going to issue and at what length, we took off something that really was hurting us, which is that the government's not going to issue any paper that's really not much to a small amount that's more than 10 years. And they were issuing a lot of 20, 30-year paper, really 30-year paper, and that was causing mortgage rates to go up. And that was a real threat because housing punches above its weight. They're not going to do that. We're going to have longer-term rates not continue to go up. I mentioned that because that was what I was most worried about. If you get long-term rates at 6-7%, then what you're going to have is you're going to have a recession. And if you have the recession, then all bets are off for the earnings, except for a handful of companies. I think that's been taken off the table by the way the Fed is issuing treasuries. We're not going to have this kind of endless rally for inflation rally where people are buying. Basically, you can buy instruments that allow you to make money if the yield goes higher. But this is what it's not nirvana. But I've got to tell you, Tyler, it sure made me much more bullish when it was clear that the Treasury is not going to try to wreck the economy, which is what I think they were doing. A lot of the billionaires that come on air who already have the money, and I'm much more interested in personal finance, don't understand that you and I and everyone who's watching is actually trying we have a twin mandate. We want to make money and we want to preserve money. But right now is the time to make money, not preserve it.
Let's talk a little bit, because I don't know how to think about this, Jim, and I'd love your guidance and advice here. I do not know, as an investor, how to filter into my thinking the election next year and geopolitical risk, and there are lots of them. How, if at all, do I think about that and incorporate it into my investing tactics and outlook?
All right, well, I'm not punting here. I am going to say that time frame, no matter what occurs, is too short for anything other than trying to figure out where you should put your bonds or your treasury notes. I think that we need to be investing right now through that period. So if we pick really good companies and we buy some, this is what we teach for the Charitable Trust, for the CNBC Investing Club, and then buy more if things roll over because a wrong candidate for the stock market is elected or is running, we'll be ready. And we'll use that to buy stocks at better prices because we are in it for the long term. A lot of people, when I first started Mad Money, would say, oh, he wants to trade us into oblivion. I hate trading. I think what we have to do is own. and try to find great stocks, and we trade only if the thesis changes. So I'm not worried about those events because they're too short-term in nature and just might give us a great chance to buy more stock.
I think that's really great advice. I mean, the buy and hold strategy has proven time and time again you cannot time, because if you're out of the market for 8 or 10 days, you've missed most of the gains anyway.
Amen. Look what happened last week. If you go back to the commentary, of which I did, if you go back to the commentary 2 weeks ago, it was almost universally, well, look, we have two hot wars. We've got a treasury that keeps issuing bonds. We have inflation that's to no end. We have Jay Powell, he's able to raise rates. And that was precisely when the greatest rally of the year started. And we are now on the cusp of perhaps the greatest rally in 20 years in terms of how long the S&P will be up. If you listen to the worry words, then you would not have been in, and all you would have done was taken profits in companies that, or maybe losses even, that are so good, Tyler, you can't just trade them overnight. But people want you to do that. I'm urging people to not do that.
There have been a couple of sectors in the market that have drawn sort of outsized attention this year, and we're going to get to them. One is AI, another is banks, and particularly regional banks. But I want to start with one that is particularly curious to me, and that is pharmaceuticals. How do I look at pharma, and particularly those companies like Novo Nordisk or Eli Lilly that have these brand new, well, maybe they're not brand new, but these blockbuster weight loss drugs that some say could be the biggest selling drugs of all time?
Timely question. I'm actually writing what's known as my no huddle, where at the end of Mad Money, and I was talking about how hard it is to diversify because there are really only two drug stocks worth owning if you want to diversify into healthcare, and that is Novo Nordisk and, more importantly, Eli Lilly. The other stocks all seem to have what's known as a patent cliff, or they have litigation problems. I believe that the new drug, Moderna, but we have a new name for it. We just got approval yesterday. Right. FDA just approved the Eli Lilly drug for weight loss, but we right now have Novo Nordisk does both weight loss and obesity. I think these will be the greatest drugs of all time, but not for these just current indicators. I believe this weekend we're going to find out at the American Heart Association meeting that these drugs do prevent heart attacks. I think we're going to discover that they help sleep apnea. They will, I think, diminish stroke. I also think that they lower blood pressure when nothing else can be used. And finally, an unsung one that there's some very interesting talk of trials is heavy drinking. Because in COVID, people started drinking heavily every night, and this gets you off it because the taste of liquor is like the taste of water. I'll tell you, I like water. I'd rather have water than liquor. It keeps you thin. So those drugs are going to be the greatest, and they're not reflected in the stocks. The stocks can both go higher. Eli Lilly can go substantially higher because next year they have a readout for a drug that I think is going to prevent dementia for 60%. 60% of the people are either going to be able to push it off or not have it. That's dramatic. So Eli Lilly's got a 1-2 punch. I really like it here, even though it's moved so much.
And it sells at a high PE, as I'm recalling, but you think it justifies it. Let's move on quickly here to AI and what the intelligent way to play AI is right now.
All right. Now, AI is another one where there's a lot of chatter, but very few companies making money. Now, NVIDIA will have the biggest AI chunk of money because they make chips that have to go incredibly fast and not burn very hot. So they're number one. They're also number 2, number 3, number 4, and number 5. That's how big they are in this. The companies that have figured out how to use it so far, you'd be Adobe for small business, ServiceNow for larger companies and turn on board and be able to run your company better. They're doing great work. And to some degree, ADM, Advanced Micro, because they've got a CPU that works with it. That's a central processing unit. So does a company called ARM that just came public. One that we're buying for the Charitable Trust, Broadcom, has got it's kind of an ancillary play. And those are the ones. And then just in terms of the biggest one that people might know, it's Microsoft. And you might know it from, they have a thing called Copilot that really makes it so that you can very easily use it to, the companies will call it productivity. You and I might just say to lay off people who are not needed as much as they were.
Let's get to banks, which were so much the focus in the spring with the Silicon Valley Bank and others that ran into trouble. Where is the smart play today in banks, whether large or regional or smaller? What do you do here?
This is so tough because the regionals right now, most of them are selling at or below where they were during the banking crisis.
Right.
I happen to like USB, US Bancorp. No one seems interested. I happen to like Huntington Bank. No one seems interested. First Horizon got a $24 bid. The bid broke down because of the problems with the acquirer. That is a good bank. But I end up thinking, okay, just go with Wells Fargo and JP Morgan. And you go with those. My trust says Morgan Stanley. I'm not ready to recommend that again just because I bought some right here at 75 and it's good yield. But the larger ones, just because we don't really know whether the smaller ones are going to be able, in another tougher time, be able to keep all the money that they have from individuals, because people pulled out a lot of money from the regionals. So you got to play it safe with the big guys. That's the only way to do it. The regionals, to me, are still too risky.